You know, every time you pick up your phone or use your computer, you're interacting with tech that was probably built with help from a company you've never even heard of. MKS Instruments. They're one of those critical behind-the-scenes players that makes the whole tech world go round. So today, we're going to crack open their latest performance report and see exactly how they're riding this massive AI and semiconductor wave. Okay, let's start right here with this quote from the CEO, John Lee, because it really sets the stage perfectly. The message is simple and clear. Things are looking up, demand is getting stronger, and the winds are at their back. So let's dig in and see if the numbers and the strategy actually back that up. So here's our game plan. We'll kick things off with their really strong 2025 performance. Then we'll dive into their main business, semiconductors. After that, we'll look at how AI is just pouring fuel on the fire for their packaging division. Check out the smart money moves they're making. And finally, see what they're forecasting for the road ahead. All right, first up, let's take a look back at 2025. It was a huge year of execution for MKS, and they really laid the groundwork for the growth that we're starting to see today. The big story right off the bat is a solid 10% growth in revenue for the full year. That shows there's really consistent demand for their core technology, even as the market was just starting to heat up. Now, this is where it gets really interesting. Their earnings per share, or EPS, which is just a key way to measure how profitable a company is, grew at twice the rate of their revenue. So what does that tell you? It means they're not just selling more stuff, they're getting way more efficient and profitable while doing it. And this slide right here, this is just a beautiful illustration of a healthy business. Their free cash flow jumped by over 20%. And having tons of cash is absolutely crucial because it gives them the firepower to invest in new growth, pay down debt, and reward shareholders, all things we're about to see. So if we zoom in on just the most recent quarter, we see a picture that's, well, mostly positive. They beat what everyone expected on revenue, pulling in $1.03 billion. They did have a tiny miss on earnings per share by just 4 cents. But all in all, a really solid way to end a strong year. Okay, let's move on and see how this all plays into their biggest and most important part of the business, semiconductors. I mean, this is where the rubber really meets the road for that coming AI boom. Okay, this is the key takeaway right here. They aren't just floating up with the tide, they're actually outperforming the entire market. The benchmark to watch is something called WFE, or wafer fab equipment. You can just think of it as the total spending of the whole industry. So growing faster than WFE means MKS is actively taking a bigger piece of the pie from its competitors. And the future here looks really bright. They're seeing demand pick up exactly where it needs to, in memory and those advanced logic chips. They think that growth is going to continue right into the next quarter. And get this, they're already getting ahead of it, building a new supercenter in Malaysia just to make sure they can handle the coming wave. And now, for what might just be the most exciting part of the MKS story, how this AI revolution is creating a gigantic opportunity in their electronics and packaging business, all thanks to that classic razor and razor blade model. You see, AI isn't just software floating around in the cloud. It's a real physical challenge. The circuit boards you need for AI servers are unbelievably complex. We're talking almost double the number of layers as what's in a high-end smartphone. And every single one of those layers needs the kind of specialized gear and chemicals that MKS sells. And you can see the direct impact on their finances right here. In just 1 year, the piece of their chemistry revenue coming straight from AI applications doubled from 5% all the way to 10%. This is real, tangible proof that the AI growth story isn't just hype. It's hitting their bottom line as we speak. And this is their secret weapon, this powerful flywheel effect. Step 1, they sell the equipment, that's the razor, and they've been doing that at record levels. Then, as their customers get these new AI production lines up and running, MKS starts selling them the special chemistries. Those are the razor blades, which get used up in the manufacturing process. This creates a predictable, super high margin revenue stream that's going to keep paying off for years and years. So if you're a company that's getting ready for a huge growth cycle, you've got to have a rock-solid financial foundation. And that's exactly what MKS has been busy building over the last year with some really smart strategic moves. First off, they've been paying down their debt like crazy. We're talking over $1 billion in about a year. That seriously strengthens their balance sheet and gives them a ton more flexibility down the road. And on top of that, by doing some clever refinancing, they've managed to save themselves about $27 million a year in interest payments. That's $27 million that can now go straight back into research, development, and growing the business. And finally, they announced a 14% increase in their dividend. Now, this is more than just giving back to shareholders. A move like this is a powerful signal from management that they are incredibly confident in the company's long-term financial health and all that cash they expect to bring in. Okay, so with a great year behind them and a much stronger balance sheet, what does the immediate future actually hold? Let's take a look at their official forecast and some of the challenges they're admitting to. For the first quarter of 2026, they're guiding for that strength to continue. They expect revenue to be right around $1.04 billion and earnings per share to be about $2. This basically tells us they see all that great momentum from 2025 carrying right on into the new year. But hey, it's not all sunny skies, and they're being pretty upfront about the headwinds. They're still dealing with some pressure on their margins because of tariffs. There's a pretty typical seasonal dip in one of their smaller markets because of the Lunar New Year, and the car market is a little soft. It's a balanced, realistic view of what's coming up. Which really leaves us with the billion-dollar question. MKS has done a masterful job of positioning itself with the right tech at the exact right time to be a core supplier for this entire AI ecosystem. They have the products, they've got the strategy, and their finances are in great shape. The challenge now is all about execution. As the semiconductor industry enters what could be a truly historic ramp-up, can MKS scale fast enough to actually capture this massive opportunity? That's the question we'll all be watching.